Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski. Buyers quickly became active due to the absence of statistics and the strong bearish market. Problems around the 1.0710 demonstrate this. Unfortunately, there are also no sellers who drove the market down on Friday. Let's see what the Empire Manufacturing Index in the US shows in the second half of the day and listen to what FOMC members John Williams and Patrick Hawker say. A hawkish stance from the policymakers will surely bring pressure back on the euro, which I plan to capitalize on. A drop and formation of a false breakout at 1.0675 will be a suitable entry point for long positions with the aim of another test of 1.0710, a resistance level that has not yet been breached. Breaking and setting above this range will strengthen the pair with a chance of rising to 1.0743. The farthest target will be 1.0783, where I will take profits. Testing this level will return the balance to the market. And the scenario of EURUSD falling and no activity around 1.0675 in the second half of the day, pressure on the pair will significantly increase, leading to a new drop. In this case, you can also enter only after a false breakout around the next support at 1.0642. You could plan to open long positions immediately on a rebound from 1.0601 with a goal of an upward correction of 30-35 points within the day. Sellers have made their presence felt, but significant drops have yet to occur, which may lead to a larger upward correction, so be cautious when making new decisions. Only another false breakout at 1.0710, similar to what I analyzed above, will be an appropriate entry point for short positions for further fall to the support at 1.0675. Breaking and settle below this range and a test from the bottom up will provide another selling point with a movement towards the new low of 1.0642, where you could expect more active bullish engagement. The farthest target will be the 1.0601 minimum, where you could take profits. In the case of an upward movement in the EURUSD in the second half of the day and no burst 1.0710, buyers will manage to recover some of the losses incurred last Friday. You could postpone sales until testing the next resistance at 1.0743 in this scenario. There, you could also sell, but only after an unsuccessful consolidation. You could plan open short positions immediately on a rebound from 1.0783, with a goal of a downward correction of 30-35 points. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The GBPUSD pair also showed a fairly strong drop on Friday, for which there were no local reasons. Let's explain what we mean. Local causes are events and news during the day. There were practically none on Friday. In the United States, the Consumer Sentiment Index from the University of Michigan was published, which turned out to be worse than forecasts, and eventually stopped the growth of the dollar. However, the downward movement before this publication was not provoked by the news of the day. However, the general decline in the British currency is natural and logical. Moreover, it should be much stronger than what we can see recently. The market is still not eager to sell the pound, so important events such as the third meeting with frankly hawkish results remain unproceeded. It is always good for the pound to have overcome the level of 1.2693, which acts as an approximate boundary of the side channel for the last 3 weeks. If it remains below this level, the probability of further decline increases dramatically. On Monday, we advised novice traders to monitor the 1.2684 and 1.2693 area. And the path fails to gain a foothold above it, the probability of the new fall will be very high. On the 5-minute time frame, you can now trade by levels 1.2457, 2502, 2541, 2605, 2684. No major events are scheduled for Monday in the UK and the US. Therefore, volatility is likely to be low and movements are weak. So, about the resistances, they're here 1.2748, 1.2791 and 2848. And finally, here is Laurie Bailey with AUDUSD currency pair forecast. Let's have a look. On Friday, the Australian dollar broke below the support level of 0.6627 and the daily balance indicator line. Now the target of 0.6570, the support of the line of MACD, is within reach. A consolidation below this level opens the path to the target level of 0.6467, the May 1 low. The Marlin oscillator is declining within its downward channel. On the 4-hour scale, the price consolidated below the balance and the MACD indicator lines. And the signal line of the Marlin oscillator remains in the downtrend territory. The short-term trend is decreasing, so we are watching the price at the 0.6570 level. Data from China published this morning show a decline in industrial production from 6.7 year-on-year to 5.6, and a decrease in fixed asset investment growth from 4.2 year-over-year to 4.0. Asian stock indices are significantly falling, dragging the Australian dollar down. That's all for today. See you online soon.